look at what we're all watching here. We've been down 600 points after being up 1,000 points yesterday. We gapped down at the open, and now we're going to close in the green. What's going on?
I'm going to go out on a limb here and say that I think the market has bottomed. And I think what we're seeing today is a short covering rally. And I think this thing is going to stick. I mean, when I was watching it today, you see the S&P falling down to around 2,400 or so. And then we see, to me, this is like classic early rally bull market behavior in that you're weak in the morning and strong in the afternoon. And that's what we're seeing here. So my view is, based on so much negativity out there, that I think we're bottoming here, and I think the market is going to surprise a lot of people come 2019.
So, Jeff, we've heard a lot of stats thrown out about how this was the worst December since the Great Depression. It's one of the worst quarters that we've ever seen for the market. But if you look at the years that are next to a lot of those stats, it's 1929, 2008, 1987, 1973. So I guess in some framework, it would make sense, if we're not turning into a recession, not rolling into a recession, that we would see a rebound. I mean, are you surprised at how far we went until we got to this point?
I really was. I mean, I hate coming off sounding like a Super Bowl because I'm not. I've been pretty cautious over the last number of years. But when you see the degree of selling that happened at a time of the year when, historically, I think we've all gotten used to November and December, even in bad years, November, December are typically sort of recovery months at least. So when you see it all the way down into, Christmas Eve and the morning after the first day of trading after Christmas ends, when you see that much, you can see both the degree of negativity and I'm sure just a lot of program algorithmic trading that's just pushing the market further and further down. And I don't know, when we're down 19%, to me that says you've more than discounted a lot of the fears that are out there regarding a recession and the China trade situation.
Jeff, to Miles's point, just jumping off that, I mean, when we look back at these big moves, including the record set by the Dow yesterday, I mean, it's generally come not necessarily as that's the bottom signal, but rather just that volatility is expected to continue. At least that's what we've seen. Not to make you make the Super Bowl case again based off of that, but I mean, unless volatility is just expected to continue, I mean, what is really going to be the driver in terms of the specific sectors that you think might take us substantially into the green?
Well, I think when I think back to this time last year, and we saw that the big corporate tax cuts were coming on and all that, and you could really see where the concern was in another year forward that analysts would have trouble making good comparisons, year-ago comparisons from one period to what was the first quarter or two of this year. So, I see a lot of that in the decline that we've seen, driven by that fear about year-ago comparisons. Now that we are, 12 months or more or less 12 months out from those, the impact of those tax cuts. So when we see the sell-off like this, that is discounting. And I think what we're going to see is just a continued group of surprises from stocks. Like some of your guests and you guys were saying earlier, when you look at Amazon having its best Christmas online selling season ever, Kohl's doing well. I think we'll have Target and Walmart doing very well. To me, all that really will go to surprise markets, surprise investors to the upside. And you couldn't find a better time now when so much of Wall Street and so much of just the investor community is just completely wrong-footed, so incredibly negative beyond what the data even seems to hint at this point, in my view.
So outside the equity markets and just talking about the economy overall, do you think that a recession for 2019 is off the table?
Yeah, I don't really think that we're going to see it. Could we see some weaker data? Sure. But I just, where is this recession? When you look at like the housing market, yes, that's been weak, but I work and live in Florida, which is sort of like the real estate capital of the world and was the epicenter of the old financial crisis from 10 years ago. And what happened? People were asking just crazy prices, and buyers were not willing to buy them. And so what are we seeing now? We're seeing housing prices. I think the data, which always lags a bit, but I think in coming months, we're going to see the data support the idea that asking prices for real estate have come down. And you're going to see, the legion of millennials and young people who are waiting for this moment to buy real estate. And again, that will just go ahead and give yet another reason why the market will surprise us all in the coming year.